notably a company that has also received investments from the family offices of the legendary cricketer Sachin Tendulkar, as well as Infosys co-founder Chris Gopalakrishnan. I'm talking about FirstCry. That's India's largest retail platform of childcare products for mothers and children under the operator Brainbees Solution. And the man behind it all is Supam, Maheshwari, MD and CEO of Brainbees Solutions. Thanks so much for taking time out. And I bet you're grinning ear to ear, and rightly so, given that dazzling debut that you witnessed today at the National Stock Exchange. Just tell us a little bit more about what this moment means for you, what the game plan is with the Big Bang IPO.
Yeah, thanks for having me here, Avan. I think it's a momentous milestone for my family, my FirstCry family, and all the members of this family and their extended, family networks. This is just a moment which we can't describe in words. It's a little emotional for us for having been at it for last 14 years, day in, day out, and creating something that we all feel very, very proud about of what we have created as India's largest destination for mothers, baby and kids in India, as well as the largest online specialist in UAE as well as in Saudi. So thank you.
Oh yes, indeed. It is a momentous day. And, now the culmination of all of this coming together. And I want to talk about the business as well, because a lot of the analysts and their brokerage notes have been saying, go ahead, subscribe. They have a deep understanding of consumers, strong in-house design capabilities. Would you say that those two factors have been, the key catalysts for driving growth? And will your own brands that you have continue to scale up?
So, if you will understand our industry, just an India multi-channel, it's going to become a $66 billion total addressable market by FY29. And it's only 16% market that is organized, 84% market is still unorganized. And the 16% market is growing at a CAGR of 20%. And being the largest mothers and shopping destination, we will benefit it from the most. So we believe that we have built a good solution set in terms of product and services for young parents to continue to give them a joyful parenting journey, which we will continue to build on that. And especially on this occasion, on this moment, we believe that that our relentless focus around building and giving joy to young parents is what we will continue to strive at.
All right. Now, Globalbees actually turned profitable, I think, within 3 years of inception. And that, of course, drove profitability for the entire FirstCry's business. Give us a sense as to how you're seeing that, because while the international business has certainly achieved scale, the losses continue at an operating level. Is that a concern?
No, it's an India playbook. So Globalbees, as you rightly said, it's around 1,209 crores in FY24. Within 3 years, we have accomplished that sizable milestone in terms of the top line. And as you said, we have become profitable as well on adjusted EBITDA basis for Globalbees. And this is a journey that we have just started 3 years back. While on the international operation, yes, we are the largest a player in both UAE and KSA. The market is around close to $11-12 billion by FY29. And we have taken our India playbook of all the moats, all the strengths that we have built in India across content, community, commerce, our front end, back end, our tech engines, personalization, curation, our strength of our partnership with 7,500 brands, home brands, supply chain moats. All of that we have taken into international, and that's the reason we have become the number one in both of these markets, and we believe a journey has just started. As India has become profitable over a 9 years plus journey, these countries will take much shorter than that. So hopefully in the next few years we should be able to become profitable as well there in both of these markets, especially given we have taken our India playbook there.
Okay, so you're saying becoming profitable in the UAE and the KSA markets, right?
Yes, we are bound to. It will happen, but it just will require some more time.
Yeah.
Because India playbook will play out as how it has played out in India and UAE and KSA as well.
Right, and so what is the revenue CAGR that you're estimating, or the revenue run rate, and will that largely be driven by organic as well as inorganic growth?
Largely, we believe that we'll continue to grow organically from here on, unless we get some exciting opportunities from an organic growth standpoint. For last 2 years, we haven't acquired any company for last 24 months. But we continue to evaluate new opportunities. So largely, it will be a function of organic growth as we go along.
Okay. You know, it was interesting that we were chatting about the listing earlier this morning and talking about how, of course, you are a category leader, you're a disruptor. And, you know, much like, for example, what we saw with an e-commerce company, Nykaa. But then as others take cognizance of the business and how well it's doing, there will be, of course, numerous players emerging within this space. What happens then once the competition really heats up?
Look, competition has been there for a long period of time in this country. I mean, everybody, if you look at horizontals or other large players, capital is not a constraint for any of them. And we have been playing on our strength for such a long period of time, and we'll continue to do that. And we believe we have made a mark in the hearts of young families, young parents, and we'll keep getting their love for many years to come. So I don't think we remain worried about it. Competition has done what they had to do, or they'll continue to do what they had to do. So not worried at all.
Okay, and I am one of those parents, I have to confess, and very happy. Now let's talk about how it works as well with the contract manufacturers. I understand that there's about 900 plus that you have in India as well as across the country for the home brands. Do you think that, if there is some sort of a disruption, or have you faced this, or is there a worry of facing any raw material suppliers being disrupted? Would that really be a huge concern?
Not at all, actually. We have faced past all kinds of COVID crisis, supply chain disruptions, whether it is during COVID days, during Red Sea kind of days of shipping disruptions and all of that. We feel the responsibility for all the young parents that we need to be there with them to provide them the product. So we prepare in advance as much as we can, and so far we have not ever let them down, and we will continue to strive to give them, joy of parenting is what we stand for with all the young parents, and new young parents, new millennial mothers who will join this journey will be their preferred partners always and always.
Lovely. And you have the few categories that you cover, 4 key categories, that is home utilities, fashion lifestyle, appliances, beauty and personal care, and home personal care. Which of the segments are driving your growth? How are each of these performing? Which is going to be the key delta driver?
These all 4 categories we are talking about is growing at a CAGR of 34% if you look at our industry report. And that itself is very, very significant in the Indian retail industry. And that, I think, if you look at our last year growth as well, was 35% year on year. FY24 we grew 35%. So industry itself is growing at a 34% CAGR. So we believe we should be able to continue to deliver on that journey.
Okay. And what is your customer base that you currently enjoy? If you could just break it down for us as to how much it's scaled up and grown. And given that you guys are investing in the brand, in technology, in products, how do you see that number going up? And if you could also break up for us the First Cry Club membership program as well, how many members you enjoy there?
So we have today around close to 9.1 million annual unique transacting customers. It has over a period of last 3 years, CAGR has been around close to 14%. So that's how we have been continuously growing. And India has, as I mentioned few times before, India produces 24 million babies a year. Between zero newborn to a 12-year, it's almost close to 300 million kids that are out there that we are addressing So market is very, very big. And although we are the largest shopping destination for mothers, baby and kids, but we are still small as a market share. So there's a lot more journey that we have to traverse.
Okay, that's interesting. And how do you really want to leverage the synergies between the offline and the online channels? What's the game plan?
Yeah, it's a very interesting question. So look, we have built 1,000+ stores. A lot of our customers, young parents, young mothers actually buy both offline and online. They join our journey offline. They also transact online. And when they join our journey online, they transact offline. It's the trust that matters. Once they have the trust with the platform, they transact on both platforms for us. So we continue to double down on both.
Okay. And any risks when it comes to the overhang of PE ownership or ESOP dilution, foreign exchange risk? Just want to understand how you'll overcome it.
Yeah, I don't think those are the risks. I mean, most of the risk things that we have already shared in our RHP as a risk factor. So nothing beyond that really that worries us or bothers us. We are fairly excited. We are focused on creation of value for our young parents as well as for all our shareholders. Now our journey to join hands with public investors has just started from today. So we are very happy, very fortunate that hopefully we'll be able to compound value creation for all our new set of investors from this day on.
Yes, indeed. And given the fact that this is a space that's growing fast, we wish you all the very best in this journey. Now that you have commenced it with an absolute bang on the stock markets today, and look forward to interacting with you in the future. Thank you so much for taking the time out, Supam.
If you like this video, then like, share and subscribe to ET Now.